Good morning, good afternoon, guys. Hope everyone is doing well. Hope you can hear me, first of all. Morning. Good to see you here. Awesome, you can hear me. I finally figured this out. Artan, good morning. Niels, good to see you here. Thank you guys for joining. I appreciate it as always. It's actually quite an interesting day for me personally today. It's been a year since I started my channel. I completely forgot about it, but just got reminded of it a few minutes ago. Yep, so great to have a stream. I'll wait for Rego. I think he will be like a minute or two late. And then we get going. I think we have quite some developments to discuss. We have interesting 2 weeks ahead of us with many events and data releases, the US elections. I think all these events will bring a lot of volatility to the markets, including crypto. And Greg and I will try to cover these today and discuss our expectations. And there he is. Hello, Rego. How are you doing?
Hello. 1 second. Just gonna hop on to the radio mic. Hold on.
Can I speak louder? Can you hear me, guys? I mean, I usually speak like this. Maybe it's.
I hear you fine.
You can hear me? Okay.
Hello. Testing.
Yeah, we can hear you.
Perfect.
At least
Perfect.
I can hear you.
Good morning, everybody. Good afternoon. All right.
Let's
Give a
get
couple
going.
minutes for everybody to join. Just gonna set up my stuff.
What do we got?
67.7 rejection. Mid range. Doesn't want to tango. Acting as a resistance. Had a really good retest here, but it was no juice. So I'm gonna wait for New York Open and hopefully get a lifeline towards this S3 level. But it's the mid-range, choppy. Front ran the range highs here towards 69.6. Looks gross for now, but things can change rather quickly.
They can. I was looking at the RSI on the 4-hour. It's resetting nicely, which is normal, right? I mean, we had like 10 days of up only, so it's quite normal for the market to calm down a bit. 4-hour RSI is dropping to an oversold area, which is good to see. 12-hour RSI still has some room to run. That doesn't mean that the market cannot bounce in a lower time frame, but I think for a local bottom to be performed, I would really love to see the 12-hour RSI for Bitcoin at least closer to 35, 30. That has been historically an area that provided at least 10 to 15% moves for Bitcoin in the last 8 months. So we will see if we get that. That would be like an area where I would have more confidence to look for new long exposure personally. Obviously, on a lower time frame, there are other levels that can be considered as well, but on a higher time frame, that is what I'm looking at.
I think right now, you just respect. It sucks to say, but unfortunately, it's the same as usual. Just once again, diddling in the middle of a range. This is probably where I expect price to have the least amount of impact in terms of risk to reward. Very indecisive at these levels. Thin air between two very important levels, right? So again, intraday direction is going to get a bit messy, but in reality, a trend has been reclaimed here. So some adequate retests. Depending where this ends up, I think you can expect somewhere as low as 64 as like an ultimate line in the sand. Do you get it? That's hard to tell right now at this current moment in time. But really, it's a range play, albeit it's rejected once again from the middle of the range for me. So again, it's not the most reliable setup. So easy up, easy down in these levels. And if you're looking for like like a macro position to take up here, I've made my comments over the past 2 weeks, that the higher you get towards the last known highs, the less you want to be looking for exposure to the upside. Usually you wait for a clearing of the range. Looks something like this. That gives you the confirmation to buy back higher. But realistically, given how much we've discussed the 53 to 50K area, the 64 to 60K area, this is where I expect most of the members in this group to have exposure from. So it's a bit easier to manage any sort of retest to the downside. So like on a daily structure, I think all of this is just fine. 67.7, we know better than to try and play this. It's quite unreliable both to the downside to the upside. Despite it working out a couple of times, as you can see, it's proven less reliable. Creates a lot of indecision to the upside. So when we look at like a macro outlook on BTC, especially the daily, if you're expecting like a trend change, like you've gotten one so far, now it just needs to follow the TA. So it can come back down to retest 64K, but really you shouldn't have too much concern for now, because naturally, I think on a daily time frame, it doesn't make much sense to touch these prices. But if there's anything to disagree with on this, I just figured like we'd cover the intraday outlook just before New York Open here, because price is moving quite a bit. And we have quite a slow macro, right? Like there's nothing really going on until next month, right? Like in terms of like really, really important prints, I don't think we have anything too concerning to talk about just yet.
I think the next 2 weeks will be quite eventful.
What do we have? Okay, nice.
I'm sharing. Look at the chat. Like we have some important dates. Starting from job openings October 29th.
Starting next month.
Up until the FOMC on the 7th, and then CPI on the 13th. But yeah, it will get more interesting in terms of events and data releases.
Yeah, towards the end of the month. Yeah.
And this is all happening before the U.S. elections, so volatility will be guaranteed.
Yes,
right? So
yes, it is. Yes, it is. It's true.
Since we anticipate volatility and potentially even uncertainty, it is important to plan out the key levels that we're looking at for Bitcoin, as well as some indexes like Total 2. I think it makes a lot of sense. To me, it also makes a little bit sense that after this significant move for Bitcoin, we see a lower time frame sell-off. Obviously, no chart goes up only. There might be some uncertainty in the markets due to all these events that are approaching. But as you said, on a higher time frame, I'm not necessarily concerned with the structure yet. To me, we are seeing a change of trend unfolding. And so first, starting from March, we had lower lows, lower highs. Now we've started to print higher lows, higher highs since that crash on August. I think that was the changing point, right? When we had the crash of the Japanese stock market that brought Bitcoin all the way to 49. To me, that was the bottom that initiated the change of trend. So from here on, even if we drop to, let's say, 64K, 63,500, from a macro perspective, it still looks good. If we are able to print a higher low there, that would be quite bullish in my opinion, and that could be a liquidity grab that would send Bitcoin past its all-time high.
I mean, yeah, it's we're dealing with something with a finite supply, right? So naturally, the sell side's always going to have a lot more work to do. And again, after a 6-month range, 3 stabs and attempts to break a demand level here has just proven time and time again that the least path of resistance, at least in the past year and a half, or I want to say 2 years now, has been to the upside. Until that significantly changes, nothing should change about your macro perspective. Money's going to get cheaper over the next couple of months. We have a very, very likely Republican administration for the U.S. economy, which is what I believe to be very, very good, especially with a pro-crypto agenda. There's a ton of things you need to be optimistic about. And of course, with that comes its indecision. Again, you're in the middle of a range. To be taking action at the mid-range point, although it'll have pivotal moments, it's not necessarily reliable. And I think we discussed this a lot, like the real ideal hedge and short here has always been towards 70K, and we've struggled really to get that. So it's been a rather eager It's been a rather eager position for people to try and take, which makes me believe that the next time we actually do visit this area, it might be big trouble for them. So that's really what I see on the macro. Going back down to 64 doesn't really change anything. It just brings us back into the daily demand and the start of the range area you should have interest in, because it can get rather competitive if it's going to range really, really accurately. Usually 60.5 is a very, very pivotal moment. With a change in trend over the past few weeks, it would make more sense to assume some eagerness towards this level. Like getting back to 60,500 seems rather extreme at this point. The same way you would be expecting 73K straight up. So that, keeping that in mind, if I go to the futures data here, just to provide some insight, funding rates are rather high for what we usually are typically used to seeing in this range. Anytime it gets to 0.1 premiums, or to 0.01 premiums, I should say, things get pretty problematic. So that's something to keep in mind. We really want to see funding rates go down, either as prices going down or prices going up. We need to see that it's spot buying that's taking us to where we need to go, and not perps, longing in the face of spot selling, which is what we've been seeing over the past 48 hours. We've had a rather large Coinbase seller appear on the books, and in the face of that has been no spot buying. It's been mostly leveraged longs, and that's been causing lots of flushes, right? Like the PA that we've been seeing is just because there's been no legitimate follow through up until now. It's just a bluff that's constantly being called, and that's normal. So long as these rates continue to rise, the longer we can assume that the middle of the range is taking perp positions, and that's an easy way to get diced. It's the spot player doesn't really get affected by what's going on in the middle, but the leverage player will. So that's creating a little bit of turmoil at the pivot point. Again, when you look at this daily chart, you need to assume that if anybody's trying to defend a bearish structure here, it's going to be here, right? They can't expect this again towards 73K. That would break the trend line or the structure that they're currently following. So 67.7 is going to be the area where you expect a fight. And again, it'll fake out to both sides. That's what the middle of the range is designed to do. So when it comes to like a BDC macro, on a daily it looks just fine. On a weekly it looks just fine. And on a monthly it looks just fine. Right? Things will happen. I know everybody's waiting for the breakout candle, and I'm telling you, I am as well. But we keep it realistic until it no longer fits the narrative. So for now, 67.7 mid range, not much action to take. You want to hedge up some profits, that's fine. You want to expect 64K, that's fine. You want to expect 60.5, that's fine. But as long as you're only taking action towards the range highs or towards the bottom of the range, I think that's the best way to go about it. If you have anything to add, DB, we can move on after this if you want.
Maybe some interesting notes on the psychological aspect. I noticed that at 70K or close to 70K, many people were looking for entries, right? Trying to catch that breakout.
It's normal.
Yeah, of course it is normal, right? But that's also a risky behavior, right? If you really want to catch that breakout, you want to bid the pullbacks. You want to bid the corrections. You want to buy when fewer people are interested to buy, right? And then you're in a comfortable position that then in a few months, in a few days, in a few weeks, you get to a point where Bitcoin is trying to break out. You sit comfortably in your long positions or in your spot positions, and you can see how things unfold. But trying to get new long exposure, new spot exposure at such a level where bears and bulls fight, I think is way too risky. I know many of you don't do that, but I also know that I received a lot of questions on what to buy and where to buy. We've had many new members entering Wealth Group last week. One of the most prominent questions under fundamentals was, where can I deploy my money? Where can I deploy my stable? So that's why it is very important to pay attention to these pullbacks that we're seeing right now, which are normal, right? It's nothing unusual yet. And try to identify these buy zones when people start saying, well, another fake out, we're not going to break an all-time high. and then you will be in a comfortable position when it happens. I also noticed one thing. I was looking at the fear and greed index when Bitcoin was at 69. It was at greed for 7 days straight, right? And I mean, if you don't look at TA but only at the psychological aspect, you know that you don't want to buy. Or you don't want to try new long positions when everybody's greedy, so to speak, and everybody's looking for new entries. You want to buy when that drops more towards neutral, ideally fear. I'm not sure if we get fear right now because, as I said, we've seen a change of trend. We might not get that deep correction to low 50s, at least not in the short to midterm. At least that's not what I want to see, right? We anticipate a higher low being printed, but if that gets more to neutral, and if we see RSI resetting for Bitcoin and alts, I think it's a time to buy, and then you're in a way more comfortable position than trying to catch that breakout. That was the first thing. Just the second thing that I want to add, if we get a breakout at one point, and I'm pretty confident we will, right? We will be trading above 70K at some point with Bitcoin, hopefully sooner than later. It's not just that move that will happen, right? Ideally, we're looking for weeks or months of an uptrend once Bitcoin is in price discovery, right? And these price discoveries, they will offer multiple opportunities to re-enter the market, knowing that now 70 to 73K ideally serves as a macro support level, given that Bitcoin struggled several times to break this resistance area, right? So even if you don't catch that breakout, you'll have time to position yourself for the next weeks and months. So, as Rego said, I would wait for a break of that level at 70K, 72K, or a deeper pullback, and then you should be sitting more comfortably in positions. That's what I wanted to add for Bitcoin. I'm glad that you pulled out the chart for the dollar.
What the fuck?
It's quite impressive what it is doing.
That's
My
silly. This
explanation.
is so stupid.
My explanation for this is that there has just not been any FOMC meeting in the last weeks and no Fed discussions on rate cuts. So people are just pricing in good macroeconomic data after recession FUD. People are pricing in Trump leading the polls, which they're interpreting as, financial markets continuing to perform strong if he wins. And so that's my explanation to it.
Could it be that they expect the Trump administration to heavily back the dollar and that dominance once again returns because everybody's kind of losing faith in it? Countries are moving away from it and trading with it. Is it that? I still don't get it though, right? Because it's going to get cheaper to borrow here, which means more people are going to borrow, which means more gets in circulation, which means how is this worth more than what it was months ago? That's
And so there are multiple explanations, right?
One
of them is obvious. Yeah, I mean, markets are often irrational, right? They not often make sense, but I mean, there are different explanations. Obviously, geopolitical tensions. First, second, we had now the probability of no rate cut at all in November, which to me is
what did that go to? What is it? What's the probability? Last time I checked, it was like 95.5. Like that we get 25 basis points.
Let me check it. It updates on daily basis. I think it was 10%. It's 9% now. But I mean, it's still a new scenario that is being priced in, right? This wasn't an option until 2 weeks ago. So that's one thing. I think that
we spoke about this last week, right? That it became no longer a case of 50 and 25. It's now 25 and no cut, right? Like
yeah.
But still, like okay, so I get it. This was I get like what? This was in anticipation that it continues at a 50 basis points decrease, and now that they realize it's clearly going to be 25, it's still irrational though. It doesn't make much sense, but
yeah, but I mean, if interest rates drop slower than expected by the market, that could incentivize people to rotate into the dollar, right? Because people expected deeper cuts and faster cuts since the first cut was at 50 BPS, which for a long time seemed impossible, but it happened, right? So that was just a time where people anticipated that interest rates will drop at that pace, which was irrational again, but that was the consensus in the market right now at that time, right? And now that you have the probability that there might not be a rate cut at all in November, and we still don't know if that's the case or not. People are getting back into the dollar, and I think also Trump leading the polls helps us as well because obviously the strong economy, strong stock markets help the dollar thrive. And it seems like there's a consensus in the market that Trump is good for financial markets, Harris is not good for financial markets, right? And since he's leading in the polls, I think people are just trying to price that in, that stock markets will perform nicely.
So, Jonas,
In my
I want to get back to this question over here by Jonas, or at least the hot take that he put. Can you elaborate why you believe the Republican administration would actually appear weaker in terms of global power? I would assume the complete opposite. That's where the strength of the U.S. dollar would be coming from, right? Like an administration that's back to being, the tough American perception we're so used to seeing in the Hollywood movies, right? Like it would make more sense, no? If anything, you would assume right now they're not respected as a superpower. Everyone outside the U.S. bubble takes Trump as an idiot. Okay.
Rego, I personally think that regardless of who wins,
no, we know that, but regardless, it's absolutely important, to know what, if it's a potential political cabinet switch, right? It's not going from one Democratic nominee to another. It's the potential switch entirely of policies. So it becomes a bit more of an important factor, right? It's not like a Democrat reelection, right, where we can just assume the policies sort of stick and whatever's happening just kind of continues, maybe slight alterations.
I personally think that what is really important in this context right now is that there's a consensus that Republicans or the Trump administration will do good to stock markets, and that Kamala Harris or Biden or Democrats in this case will be less successful
I just think
navigating.
it's the complete opposite of what Jonas has said. But just going
But
based off what I know, yeah.
I don't think that it matters much what I think, what you think, or what Jonas thinks. I think the market consensus is what counts, right? And
The
I think
market
there's
consensus would agree with what I'm saying, is what I'm trying to say. And again, like I'd only point it out if I felt like it was a misinterpretation of how the markets would respond to it. Not good for global politics or economics. Regardless, though, we have a very, very important election. The U.S. economy is probably the most important economy in the world. So naturally, change in political cabinet is going to shake things up a bit. There's absolutely no doubt about it.
Yeah, and one interesting data point, and we've discussed this before, is that regardless of whether Republicans or Democrats won in the elections in the last few decades in the US, stock markets have always performed positively after the elections. So that's a bit of hopium based on past data. Obviously, past performance does not necessarily guarantee that stock markets will do well now. It's a completely different context, right? Right? We have geopolitical tensions, we have ongoing rate cuts, we have so many things unfolding. But usually, stock markets have done quite nicely after elections. So that's something to look forward to and to obviously monitor as well. Now, whether I like Trump or I like Harris, I don't really care. I care what the data tells me. I care what the consensus of the market is, because I know that markets will likely be affected by that consensus. Sometimes I might find the consensus irrational. Sometimes I might agree with it. As I said, it doesn't often matter what I really think. It really matters what affects our markets. And in this case, this would be one explanation that I have why the dollar is thriving at the moment, among other factors as well. And there will be different thoughts and different opinions, right, Rego? We will not necessarily agree on everything, even what we discussed, right? I mean, we're not always on the same page, so it's always interesting to engage in the chat and see different opinions as well.
I think it's you know we're in an industry of crypto, right? And we've been given a clear sign of who's for us and who's against us. So like naturally, I would expect everybody to um, see the optimism and the potential that comes with that, right? Being backed by a U.S. political cabinet with the necessary authority to do great things for our industry. So naturally, as traders here, I just want us to assume that we understand that there's like a clear lean and who favors us more, right? Regardless, and I speak mostly for Bitcoin. I don't speak mostly for the rest of this entire market, but for Bitcoin, regardless of what happens, it will thrive. It's what it's designed to do. In that sense, I totally agree with you. But for the rest of the crypto sector, it's going to matter quite a bit. We can't. I don't think the market can afford another 4 years of being witch hunted. Great builders, great exchanges, trying their best to provide avenues for American citizens, and then being blocked pretty much at the gate by these political these policies, pretty much, right? So again, I think what favors crypto, and I say crypto, not BTC, that's in a realm of its own, but what favors crypto greatly, especially for American citizens, is one particular cabinet over the other, and that's pretty much the importance of what I'm trying to say here, right? And what a good narrative and the positive narrative that could unfold here, right? So you just want to be ahead of the game, all things aside. And again, it's not a matter of preference here. It's just a matter of what's best for markets, what's best for trading. And I hope that's not misunderstood with what I'm trying to say here. The importance on it is because of the potential it could do to support crypto in general, right? As you know, for the past 4 years, this administration has relentlessly attacked this space, even the honest actors, which is problematic. It's problematic for the growth and seriousness of this industry. So again, this one matters to me. It matters a lot, and for those that dabble in altcoins way more than I probably ever would, this should matter to you as well. For a trade standpoint, right? As traders, you guys want to be able to trade what you want without any sort of big brother overreach, restrictions, etc. Right? So again, for the space, it's leaning one side in favor for us. It's extremely huge that it happens, in my opinion. Right? I just think it's super important for the space. We need support, and to constantly be attacked and witch hunted as if we're doing criminal operations here it's not helping us one bit. So that's why I bring up the importance of it.
Mm-hmm. I think one thing that's also not being as heavily discussed, that would come potentially. I'm saying potentially, right? We don't have guarantees here, but what that could come potentially with a Trump win is maybe an ease on the geopolitical sphere, right? If we have less wars going on all over the world, I think that will be good for markets as well, and for the crypto sector. As we know, whenever we had war fought in the last few years, actually starting when the invasion in Ukraine happened, right, which was under the Biden administration. I'm not saying that it is his fault or it's Trump's fault. I don't really care about that. But if Trump wins and manages to ease the geopolitical tensions around the world, I think speculative assets will benefit mostly from these developments. So that's something that could also potentially come with the Trump win. And again, I'm not Republican. I'm not Democrat. I don't.
Just saying,
like,
not a U.S. citizen either.
I'm not a U.S. citizen, right? I mean,
that's most important, right? Like we're not U.S. citizens. We're just discussing it for our own interests, right?
I'm from Kosovo. My country was liberated under the Bill Clinton administration. It got independent under the Bush administration. So a Democrat and a Republican. So I don't really care. I don't have a bias towards either. So we're just discussing what we could see unfolding in the next few months and years.
I'm yeah, it's I lost my train of thought. I was too busy looking at this beautiful range on Ethereum here. I've struggled to understand what happens with this next. So I'm kind of glad we're in a range, just because it's cruise control for traders, right? This is cruise control. You buy here, you sell here, you just chill. But you know, like on a macro perspective, I struggle to understand what's next for it. It's puzzled me for quite a bit because I'm torn between Ethereum and Solana's market cap split here, and it just, you know, where this curls upwards, Ethereum struggles to the downside. So I'm seeing a clear correlation here, and I don't want to look crazy, but doesn't this feel the same? So I'm just going like crazy trader brain right now. I'm just looking at stuff like.
I was thinking that Ethos was at a big level, right? I mean, that was what it tested a few days ago was the previous range lows. We're very close to that. I think it got front run by a bit, but that's a big macro level that needs to be reclaimed. I think if we want also more faith in altcoins in the next few weeks and months. But yeah, the macro perspective is quite clean on Ethereum, cleaner than on Bitcoin, if you ask me. What do you think about that?
Yeah, definitely. I mean, definitely. Yeah, because we have more data here, right? Like if you look back, we've traded in this area, you know, for a number of times, right? Like we spent a lot of time towards these prices, whereas like BDC, the only thing we have is this little section in time, right? So naturally, it's a lot harder to predict, and of course the supply and the tokenomics of BDC change the whole dynamic of that, right? Whereas ETH, kind of self-explanatory in terms of that. So yeah, I would say this is way more straightforward. You play a range, and you know it's autopilot for a trader here. They see this. You might miss one or two plays here. You might get stopped out on this play. You might get front run on this play, but realistically, you've been able to, you know, snag some pretty nice moves here. So we play that range until it ends. But in terms of direction, man, the structure looks kind of fucked. Excuse my language, but like the structure kind of looks kind of fucked. Like it could, I'm not saying that it's like bearish or anything. I'm just saying that like this could like take a bit of time to resolve. Like you know, opportunity cost is going to matter here. No. I'm just mad will. When I'm doing that, I'm just doodling. I'm just looking at like things, and do they feel natural to me on with the naked eye, right? To draw out a fractal like that. But like don't take it like that. I'm just brainstorming. But DB, stock's just open. Hold on. Before I continue. Ooh.
What do we got?
Not a good open, I'll tell you that much. I don't find this is a good open at all.
For me, for the S&P 500, the level that I want to see hold, let me just bring that chart up.
These lows right here. 5,800, 5,809.
5,809. That's a lower time frame. Let me look at the bigger picture. That's lower time frame, higher time frame. I want to see 5767 hold. That's the previous all-time high area. We had the same play after we broke out of 5658. It went into price discovery, then it came back to retest the previous all-time high area. Now we have the same situation, price discovery, new all-time high, dropping back towards the previous all-time high area at 5758 or 5760. So that's what I want to hold. Acceptance below that would be quite bearish in my opinion, and could suggest a deeper pullback for stocks. And that will obviously influence the crypto market as well.
Yeah, I would say that stock weakness is obviously going to play a role on our market. We tend to follow it a bit, or at least like accelerate a little bit ahead of it. But realistically, it's not like to say, oh, the SPX is bearish, you know, like it's not, it's not at all. Can have its, you know, healthy retraces and still be completely normal. Bitcoin being a lesser liquid market, right? Might have a deeper pullback, but realistically, man, guys, you know, not even 5% off the highs just yet. So nothing to be too concerned about. Stock weakness, yeah, I would imagine crypto might suffer a bit. Speculative markets always tend to go a bit risk off much quicker than you know a TradFi. And with this U.S. dollar continuously wanting to show strength, until that stops, our crypto might suffer a bit. But I don't expect it to go much higher. I can't justify it in my head. Again,
Even from a perspective, it's in an overbought area on the daily. So I wouldn't be surprised to see a local top soonish, but that would depend on the data next week, right? I think that if the data on the economy is good, that might add some momentum to the dollar. Maybe we see something like 105 to 106. Usually the dollar thrives when data suggests that the economy is doing well, especially in the context of high interest rates, right? This adds to this feeling even more because you had high interest rates for 3 years and you still have a strong economy, you still have a strong stock market, and obviously the dollar follows this. If the economy is not doing well, then the dollar will drop as well. But we're quite in a tricky position, right? Because we expect the dollar to drop. Can you hear me?
Yep.
We expect the dollar to drop, right? But one factor, one trigger that might lead to a declining dollar would be bad data of the economy. But on the other side, that could also lead to a small pullback on stocks, right? So, I mean, not sure how much we want the dollar to drop because of bad economic data. So it really matters what moves the dollar, because different triggers will have different impacts on the crypto market.
Yeah, a bit.
I would be surprised if we don't get that 106 area. That's like range highs.
Why? It wouldn't make any sense.
You mean fundamentally would make any sense?
No,
like
it just
TA-wise?
wouldn't make any sense. It wouldn't make any sense.
But did this move from the dollar make sense in the last couple of weeks?
These past 3 weeks, no. This past month, I should say. But that's just because
Exactly,
there's been no FOMC, so there's been no rate cut. I totally like when I really look at it on the weekly, it makes even more sense now because you got your rate cuts, or everybody pricing in the amount of rate cuts, right? Then we knew we weren't going to have any rate cuts for the next month, so prices kind of drifts up, and now going into FOMC, like I don't expect this to pretend to fake out the range and then go and I expect it to be here that we reject, right? I expect this to look like this. It wouldn't make. Take care, Jonas. By the way, thanks for your input. By the way, we appreciate the engagement. It helps a lot with the streams. But back to the dollar here. Like I'm expecting weakness like sooner rather than later. It just wouldn't justify that 50 basis points cheaper. We're just back towards the range highs, which wouldn't make any sense given that we've struggled maintaining it. We struggled to hold those prices anywhere near those prices despite maintaining the rates for that long. So like again, fundamentally that wouldn't make any sense. Like it wouldn't add up with what we've been given. But then again, markets are very good at being inefficient with your thoughts. So already this has exceeded my expectations, but realistically I expect it to curl over here. It's just with FOMC coming and then pretty much a 90% agreement that rates are getting dropped again would just make the most sense, right? That would make us almost a full point down from where we traded at these highs, right? Like it just wouldn't add up with I guess what I'm trying to say.
I think it depends also a lot what Powell has to say during the FOMC meeting. Like if he's more confident on more rate cuts in the next months, I think that could decline the dollar as well.
Oh, it's literally the context of what Powell says every meeting is really the bread and butter there. It's really his demeanor and his choice of wording that the real edge is in. The actual number won't do much, but it's just from like a logical standpoint or from like a mathematical standpoint. Like it just would it make sense to struggle at these price points? With a higher interest rate, and now that we're lower, it goes up beyond that point. It just wouldn't make any sense to me. But
I wouldn't be surprised if we get good data on the economy next week. We get a tap to that range highs. not saying that it makes sense, but like TA wise and fundamentally speaking, have more reason for the dollar to pump and then drop on the FOMC meeting, depending on what Powell says. And I don't think that Powell will say much that would land into the consensus or the speculation on the market for no rate cuts in November. I think he will be a bit more open towards rate cuts, given that they decided that a 50 BPS rate cut will be appropriate. So I'm pretty confident that he will say something like rates will drop in the next few months. We will look at macroeconomic data and inflation data to educate our decisions, but that will be enough, I think, for speculators to speculate against the dollar again. So that's how I would see things unfolding in the next 2 weeks. And if we get a reversal for the dollar from range highs, that would be, I mean, pretty good for speculative assets. But we will see, right? We're talking about probabilities, and these are not guarantees. But if I had to make an educated guess, that's how I would see things unfold in the next 2 weeks. I don't think there's a way to track ETF buys live. I think
we usually get our inflows at the end of the day, or at least the volume by the end of the day. Which you brought up a good point. I forgot to mention this. Pretty much all week long, we've had incredible inflows, like incredible inflows for an ETF. I don't think anybody understands the magnitude of the buying that's going on. For something so finite. I like to take that as a big positive. Interest has increased, right? It's a growing thing. It's not a dying thing. It's not a nothing burger like back in the day, where the minuscule volume. The inflows are rather, they're rather quite large, and they've been consistent. That's another thing to keep in mind. But to track them live, unless you have like one of those super expensive terminals and you're a TradFi Andy, I don't recall any free way of doing it, unless you want to pay like $40K for a terminal.
Yeah, exactly.
Every year.
It's interesting to see. It's interesting to see ETF inflows dropping yesterday after last week's, I think, record highs for flows, right? So that came also in addition to some Coinbase whales selling Bitcoin. And if to me, it seemed like ETF buyers got smarter a bit because they used to foam into range highs and now seeing ETF inflows drop as we get closer to them. It's interesting to observe.
Yeah, and I mean it's natural. You approach the range highs. Nobody has the unknown on their radar, so naturally, when the buy becomes less and less valuable, naturally the inflow decreases. That's only normal. But talking about, I think it's actually worth the mention here because it's one of our major market caps now, and it's proven to be quite nice. Is Solana? I am a big fan of it. I'm a big fan of this daily structure. It's held many levels for quite a while now, and it's stealing quite a bit of market cap from Ethereum. If I'm being completely honest with you.
Mm-hmm. And it's also one of the reasons why alts have been lagging or really weak in the last few days, apart from Bitcoin dominance rising. If you look at the others, dominance index, it's also dropping significantly.
So I mentioned this yesterday with Rob on stream. Is that the previous cycles felt a lot more organized in the sense that everybody kind of knew what ran next. And this time around, because of the abundance of altcoins and everything on different layers now and different protocols being launched every fucking second, this market space has become quite diluted. And what I mean by that is less feels like a narrative forming altogether and more like a musical chairs game lately. But the musical chairs aren't like how they used to be in the past, where it was like one sector after the other. So you had the gaming sector, then you had the decentral finance sector, then you have the slow layer projects go run at the same time. Then you had all the Ethereum ones run at the same time. This time around, it's been much more of like a chase, and ironically enough, it's more indicative to me of money not necessarily growing in the secondary market, but necessarily like more just jumping from one project to the next. The same existing money that keeps jumping from one project to the next. That's what I've noticed. And until I see signs change, and that'll most likely require like like a Bitcoin all-time high, because that tremendously increases, the valuation that we all have as market participants in terms of USD, which eventually needs to come back out and runs a lot of projects with a higher valuation. But realistically, at this current moment of time, it just feels like a death spiral, and I'm not trying to FUD or do anything like that. Just making an observation of how capital has been flowing in the secondary markets. It feels more like it chases from one play to the next rather than money just flowing into a sector, and when that's reached a decent valuation, they move on to the next one. It was kind of like synchronized. Nowadays it's all scattered, and they're rather short-lived, right? Because there is actually like no insane amounts of money flowing into it. It just seems to be capital chasing in circles, right? That's one thing I've noticed, but in particular, Solana stands out. It's not that it broke new highs or anything. It just has the most potential on a daily structure. When I compare it to Ethereum, it's got a lot more to go, right? It has a lot more to go. And when I, compare it to Solana, smaller market cap, and everything above just mentioned, has a lot more potential to break these highs.
Yeah, I'm also holding a bag. I've been accumulating in the last few weeks. I
Me
think it's
too.
my biggest bag. Like 20% of my total allocation is in Solana. I don't hold any Bitcoin, unlike you. I don't hold any Ethereum.
Oof.
So this is the high that
Big
I've
oof, BB.
allocated to. Yeah, yeah, I know. That's a controversial allocation, at least
Yeah, no
discussing it with
BDC
you,
is a
right?
sin. It's a sin to have no
But look,
BDC.
look, I have an excuse. I came into the market later than you did, so you were able to accumulate at interesting levels that provided a good RR. For me, at the time that when Bitcoin was really really cheap, I didn't have the capital that I deemed as sufficient to build up a big bag on Bitcoin. So that's the reason why I would buy Bitcoin today if it was at 15K or lower than that. But back in the day, that was a bit unrealistic for me.
So
But it's not like I don't. It's not like I don't believe in it fundamentally, and I believe in Solana over Bitcoin. That's not the reason for choosing
like
Solana.
there's I'll tell you a little story, DB. When I first started, my original thought back then, because it was just around the time of like Ethereum was a thing, right? X Ripple became a thing, Dash became a thing. It was around these days, right? It was like the really really early days. And do you want to know what my mentality was? For the most part, like going into it,
And
was that holy shit, Bitcoin's too fucking expensive. What if I just buy this thing that's 4 cents, right? And if I thought that way and actually acted upon it, it was someone that actually taught me the idea, saying, look, you don't have to make such a statement, entering a market. You could just kind of just nibble at it, for years and years and years and years and see where it takes you. When I first got introduced to the space, before it was like Bitcoin, that is what got me, interested in it. But realistically, when I started to see, oh my God, there's all these protocols coming out and all these solutions coming out, like I could be one of the first ones here to these ones, right? Like that was my mentality. And I kept telling myself, well, fuck, $1,500 for a whole Bitcoin. Like I work a shit job here. That's like almost like a month's pay or something like that, right? Like I was freaking out. I'm like, I can't like, I'm not gonna make a lot of money with this. What's it gonna go to? $2,000? Like that was my mentality, right? I was like, I'm too late. There's no way I make it in. And then there was someone telling me, no, you just got to nibble at it, for a series of years and then see where you end up. And that's what I did, right? And today, being my third cycle that we're going into, I've ran into so many people that tell me the same thing, that yeah, you were lucky to get Bitcoin at $3,000, at $1,500, at $6,000, and I told them, how expensive it was to me, or how expensive I perceived it to be at the time. When you would look at Ethereum and it was $15. When you looked at what's another good one that I can mention? The first one that comes to mind, because it felt like the biggest fumble to me, was Ethereum, because I remember when it was trading, between $16 to $20, and I didn't have the experience to know how to obtain it so easily in that early stage. But at this, like the same time, it's like you look at Ethereum now, and most people will be like, "Oh my God, $2,500! I'm not touching that. What's it going to go to? 5,000? That's only 2x my money." And it's just like, when you're building a long-term portfolio, when you're building like a long-term speculative thing, nibbling at it, at tiny amounts at a time is really, really how you make an impact. It took me, 4 or 5 years before I started to see my stack become my stack, right? It took a really, really long time. But all I'm trying to say is, like, you could speculate as much as you want on the other side of things, but like, nibble at it a bit. At the very least, have some exposure, like over the years. You never know. I guess that's my message to you and to everybody else in here. Like I understand that you can't just go out and buy one BDC and hope it goes to 300K. I get it. But just nibble at the stack a bit. Throw 30, $40 at it every week. See where it goes. See where it takes you. See where it goes in 10 years from now. You might have a retirement account you didn't even know about.
Yeah.
That's all I'm saying.
I don't.
It's one. What?
It makes. I'm not saying anything against.
It's one of the only hard assets that exist, right? It's becoming one of the only recognized assets around the world. Like if there's a sure thing if anything in crypto has been a sure thing, it's this one, right? So like we know for a fact it's a sure thing. So like it's you struck gold, right?
Yeah, I don't think that Michael Seller could have pitched it better than you, man. So I completely agree.
I need to remind everybody, right? If you guys are long-term speculators in crypto and you guys tell me 0% of exposure to BDC, it's like someone just stabbed me, right? It's like the weirdest feeling ever. Like it doesn't make sense. So like I utter again and remind you all, that there should be some exposure there, like at the very least, like see how it performs for you over 4 or 5 years, and if you're just sitting in dollars all the time and you have this excess cash laying around and you want to DCA it, like there's no second best, right? Like, and I mean that like without trying to be funny, like it's actually the truth. Like if you guys are crypto speculators, so again, I'm just a reminder for the long-term portfolio guys, like it should be a crime. It should be a crime, but we live in a free world. I'm just joking, DB. I'm not,
Of course. There's one question I wanted to answer, if I may, briefly, from Rilton. I don't know if he's still here, but he asked something that we mentioned earlier, which is fear and greed index still at greed. Do you think it is likely a neutral or a fear before all-time high? I said it before that I think it is possible that we go to a neutral stance if we drop to, let's say, 64, 63.5K. I wouldn't want to see it at fear at this point in the cycle, to be honest, because that would just mean that we would lose, once again, key levels for Bitcoin. And I want to see some strength in the market. I want to see a higher low here. So I don't think that if that happens, we can get to fear. So neutral would be really nice if we get that. All right. Yeah, he's here. Awesome, Rilton. So you got that one. 7 more minutes. Maybe we get some questions from the chat.
I mean, let's spitball some final questions here.
I think we discussed many things. We discussed Bitcoin, obviously, some expectations for the next weeks up until elections. But obviously, a lot of it will depend on the data that we receive. We will discuss it next week as well in our stream. I think we have
next to FOMC is going to be wild. By the way, it's just going to be an emotional time. November 7th, 2 days after the election, we probably won't even have our winner. If I'm being honest with you, it's going to be a wild one. So again, I'm expecting markets to go fucking batshit crazy over these next 3 weeks. It's going to be very, very emotional. Don't get lost in the sauce. I can assure you, it's going to get crazy. Like I can.
Yeah, it's a good time to make good profits with the volatility, but it's also a good time to manage your risks even more because obviously with volatility, it becomes easier to lose capital, especially if you're leverage trading. So we cannot say that markets will go up or will go down because of these developments, right? We will play level by level, but volatility is 100% guaranteed. With all these things approaching, that's safe to say, I think. So you got a question on DXY,
Yeah,
Rego? We
I'm expecting weakness sooner rather than later. At least within my expectations to run the range highs, at least the levels I pointed out here, to run back into this, knowing where we've traded while prices and rates pretty much stalled, would make less sense to me. If I'm being honest with you, I would expect rejection towards the 105 area. But again, is it something I bet on so close into the elections? The political administration is going to change, potentially change. Sorry, not that it will, but could potentially change, and that can alter a lot about the dollar, how it affects the global trade and its alliances and everything and everyone involved in using it. It's up in smoke for me. Typically, I expected the breakdown here, knowing that we're getting cheaper and cheaper rates to borrow and borrow and borrow. So I want to expect rejection slightly before these range highs. So again, it's going to be between 105, 105, and I don't want it to go much higher than that. 105 is good for me. It's a good number. Do I say you take a short on it? Already, it's in an irrational move up based on my understanding of it. So for me to trade something I can't make sense of is not something I do. So again, I just let the volatility whiz away here, and until it's done pulling a tantrum, I won't take any action until then. But 105 is where I expect things to get a bit rowdy, if not already. Five more minutes here. If there's anything else, guys.
There are a few people typing, so let's see what we got.
And we got Chungalunga over there.
You know what Chungalunga is?
I don't.
It was like Chungalunga. So this member, he's from the Balkans, just like I am, and Chungalunga used to be a chewing gum brand.
Oh, okay.
In the Balkans before, and he's from Slovenia, I think.
Oh wow, look at that. Yes. Okay, we got a lot of Europeans in here. Slovenia's in Europe, right?
Yeah.
Okay. I got a bit scared there for a second. I was like, shit, I'm not sure anymore. What are your thoughts on the statements that the U.S. economy is being artificially inflated until the elections, and it will crumble soon after? What's going on with OXO? The price action is not so good. I'll answer your first question. As for OXO, it's an entirely actually I'll just go off with the OXO thing to start by saying it's a completely speculative asset up until this point. It comes with a significant amount of risks. It's trying new things. With that, it's also a market that's quite infant in its development, and the liquidity is not what you would expect on something like BTC or ETH or SOL. So the prices tend to move much more rapidly and aggressively. So just keep that in mind. You're on a highly speculative asset, and that comes with it's the necessary nature of it. As for the statements on the U.S. economy being artificially inflated, this is lining up more with the realm of the political tag game that people like to play, saying, oh, it's going this way, or it's the cause of this and that, and then it's to protect a certain administration. This is where we start going into the what ifs and what ifs and what ifs. The truth is we don't actually know, but we have signs. We have signs to assume that things are much more expensive than they come out to be, and et cetera, that maybe, just maybe, the whole story about inflation might not be as accurate, might not be as reliable as they're telling us. There is that argument, but of course you're speculating here, and with that comes its potential other what ifs, right? So it's nothing definitive. It's definitely you could definitely take the past 4 years and how much certain numbers and logarithmic charts and et cetera. Don't let me go into detail how they've been manipulated to fit a certain narrative or to fit a certain agenda. And in this case, I don't I don't look down on people that assume this is being done with things as important as economic numbers and inflation as well. But at the same time, it comes with its potential loose ends, right? There's a lot of things you can't prove by fact or by literal definition, and for that reason, this is a speculative thesis, and you know, high risk, high reward. It's almost like it's almost like a you know, you're seeing the cup half empty type thing when in reality, you know, it's not so, you know, seeing through the cup is not so necessarily clear. It comes with just enough or just as much of doubts and loose ends as the latter opinion, right? So just keep that in mind. It's not the easiest thing to prove, and it's not the easiest thing to disprove either. So it's up in smoke. Again, the only, you know, the only real contradiction I have to say to this is that a market doesn't necessarily reflect the living conditions of a person or the actual economy everyday citizens go through. So the fact that things are more expensive could come to a number of things. It could come to a fact that, you know, someone's supplier raised the prices of their manufacturing goods, and for that reason the product that someone sells you is more expensive. There's so many factors that go into why things might be more expensive today and why you're paying so much more. There are also opportunists in market that take these, you know, tough times and use it as an excuse to price adjust and to price inflate, even if there's no change on the cost of their production, right? It gets really, really, really messy. And that's why most people, especially traditional traders, sophisticated ones, accredited investors, don't like to go off on these uncertain theses or arguments. They just tend to go with the data they have in front of them, because that's how a hedge fund will operate. That's how any of the traders I pretty much just mentioned will operate, and it's kind of like a respect basis that we assume. You know, it's kind of like a tax system. We assume you're telling the truth. We assume your numbers are right, but realistically, we don't know for sure. And that's what I'm trying to say. DB, if you have any notes to add on that.
No, I'm all good. I actually noticed that it's 4:01 for me, so I think Pocky has a stream, so I don't have anything else to add.
I don't see Pocky just yet, so I don't mind
Sure.
sticking around until he finally pops in.
Okay, maybe for OXO, I have one thing to say. It's always been a narrative play for me, an AI narrative play. It never had a proof of concept for us to speculate on a potential utility, right? They've been always developing their product for the past 18 months. So it's always been based on narrative promotion. I'm personally holding my bag. I want to see the mainnet launch. I think that could bring a new wave of positive momentum to the coin. It's been a bit negative because there's some dissatisfaction from the community regarding their development. People think that their mainnet launch has been delayed, which I mean, I tend to agree to a certain extent, right? I think they should have developed it a bit quicker and make the best out of this bullish cycle that we had in the last 12 months. But yeah, nevertheless, we will see what the mainnet brings, and if it can improve the sentiment around the community. And I think that should be the catalyst for a more positive price action. But regardless of the fundamentals part, I think the on-chain volume on ETH is still relatively low, right? And this is, I mean, on-chain is a very speculative market, as Rego said. We've only seen on-chain coins on ETH perform significantly stronger than the rest of the market in February and in March, which was very close to a local top, right? And this basically tells you a lot about how capital rotates in bull markets from high caps to mid caps to low caps, and then to the on-chain market. And I mean, it's a bit unrealistic to expect a very positive price action on OXO right now with the Bitcoin dominance this high, right? And with high caps outperforming mid and low caps right now. So if we get a bullish cycle, let's say in the next few months, I expect capital to rotate to on-chain as well. And if the fundamentals improve as well, then I think OXO will do fine. But again, I mean, the risk needs always to be managed on these plays, right? Because I mean, they're not the safest assets that we can speculate on. They're obviously very risky, so it's always good advice to not allocate more than 5% of your entire capital. to a single on-chain coin. Because this is not Solana. You can put 20% of your capital into Solana or into Bitcoin. You can put 50% of your capital into Bitcoin, but you cannot do that at OXO. So that's just what I wanted to add regarding that question.
The Gen, thoughts on Stanley Druckenmiller? Druckenmiller betting against the bond market, saying likely we will have more rate hikes. Stanley's a very, very intelligent person. Not really the nicest to hear from the man himself. There's a number of reasons why I think he might be doing this, and he just does not trust the debt that the U.S. owes. Nor does he probably trust the ability for them to refinance it, and that's a hot take. It's a strong take, and it's you're going against you're pretty much going against some really what I believe to be really, really solidified and backed promises, right? U.S. bonds are nothing to really fuck with, and they are typically protected very, very well, as there's usually a guarantee behind some of these things. So to write the bonds as they'll fail, that would be like catastrophic on like a 2008 level, because that would mean a lot of loaners get blown up. It's a wild take. It's a Michael Burry take. It's like movie worthy is what I'm trying to say. Do I necessarily agree with him? You have to see if he's betting on the U.S. bond market specifically, he has to see America as a nation in decline, or a nation that is moments away from imploding. Which again, that's kind of a hot take. It's there's a lot at stake for something like that to completely fail. So again, that needs to come with its extensive research, and it's not even about maybe he's right. It's more about like what powers are at hand here to bend the rules a bit, or to prevent this from happening, because that would be mayhem. Like bonds failing in the US would be absolute mayhem, upheaval, crisis, like true crisis. I don't know, the same way I saw GameStop, the stock in GameStop, and how hedge funds got pressed. You're pressing the U.S. here. Government-backed bonds. This is, if they'll step in for GameStop, they'll and their hedge fund buddies, they're going to step in for U.S. government bonds not to fail. You're betting against, in my opinion, the Fed, and that's a tricky thing. So that's my opinion on that. But Stanley is a man of great reputation, and he's one hell of a person in the world of finance. Who am I to fucking, argue his thesis? I just, from a short-sighted point of view, I find that, rather morbid. It's a morbid outcome, and it's rather depressing. And I choose not to see it. How about that? Maybe it's weird, but like I just choose not to see it that way. There's too many assets at hand, and I thought 2020, COVID would implode the whole world, and instead, what I was told is that, don't worry, guys, we're breaking the rules just this one time. We're gonna save everybody, and they did it. They flat out went and did it. Right? They save, and I say that very, very lightly, but you get what I'm trying to say. They bent the rules to fit a narrative, when something should have otherwise imploded. So again, when you're betting against U.S. bonds, I need to assume you see something that nobody else sees, and even if you do see it, there are some great powers at hand against that, right? So that's where I stand on that. It's you'll never hear it from me to say, oh, we're going to take shorts on bonds, or we're going to bet default swaps on bonds that they'll implode. We're essentially saying that the U.S. economy would completely destroy itself, which is probably one of the most morbid things I've ever heard. But that's Stanley. When he talks, it's very monotonous, and who am I to judge? But that's an excellent question, by the way. I have to probably go listen to his actual interview, but I assume that's his thesis. But I definitely have to go I have to go listen to Druckenmiller on 2x speed. Yeah.
All right. Anything else?
I don't know. I don't think so. I don't see Pocky here. So, but we've been going on for 10 minutes more. So I guess if there's anything else, we'll answer it. If not, we're gonna leave the stage.
Yeah, it's been a pleasure as always. And I think we
Indeed.
covered some interesting topics.
I see 2 people typing. So let's just give them a moment. Yeah. Imagine you're typing and we just end the stream. Thank you, GG. Rejection. Okay. Perfect. All right. That was your chance, boys. That was your chance. Anybody typing from now on?
All right, thanks, guys.
Right on time.
And engage. Pocky's here, so let's leave the stage to him. Thank you for engaging us all. Thank you, Rego, and we'll talk next week again.
DB, always a pleasure. Day, everybody else, thank you so much for coming by, hearing us talk. We talk politics, everything, all the way down to macro. We appreciate you. We appreciate you, and we'll let Pocky take the stage now. Pocky, next time, like the formality is usually we see you in here like 5 minutes before, so like we were waiting for you, and we just assumed we had the stage for a bit longer. Just ping me, and we'll get off.
He didn't share the red eyes, so that's our signal to leave.
Yes. All right, it's a miscommunication on our part. Sorry for taking your time, guys. We'll see you next week.
Take care, guys. Bye.
Take care, boys.